All right, today we're tackling a really interesting one, Arcturus Therapeutics. This is a biotech company that has Wall Street in a complete tug of war. And honestly, it's the perfect story to show you just how high the stakes can get in this space. We're talking huge risks, but also potentially transformative rewards.
So let's just get right to the heart of the matter. Look at this. You've got some analysts saying the stock is worth maybe $9. Then, on the complete other end of the spectrum, you have a price target of $72. I mean, that is an insane gap. We're talking an 800% difference in opinion. So the big question is, how? How can the experts be this divided? That's exactly what we're going to figure out.
Okay, so Section 1, a high-stakes biotech bet. And this subtitle really says it all, why a massive valuation gap exists for this next-generation mRNA company. You see, Arcturus is pretty much the definition of a classic biotech gamble. Everything, and I mean everything, rides on whether their science works in the clinic. The market's basically trying to price in total failure and massive success all at once. So what do those numbers, $9 versus $72, actually represent? Well, it's pretty simple, really. That $9 target, that's the doomsday scenario. It assumes the whole pipeline is a bust, and the stock is worth nothing more than the cash in the bank. But the $72 target, that assumes just one of their big shots actually hits the mark. One success. That's the disconnect. That's the bet.
All right, let's get into the science. Section 2, the self-amplifying secrets. We're going to unpack the core technology that drives this whole investment thesis. Because to really get Arcturus, you have to understand what makes them different. The secret weapon they have that could be a serious game changer for mRNA vaccines.
And that technology is called mRNA. That stands for self-amplifying mRNA. Now, you've probably heard of mRNA from the COVID vaccines, right? Well, think of this as the next generation. Conventional mRNA just gives your cells a set of instructions. But this stuff, it gives them the instructions and then it says, oh, and by the way, make 1,000 more copies of these instructions. It's a pretty brilliant idea.
Here's probably the best way to picture it. The mRNA we're all familiar with, that's like a single blueprint for a protein. Your cell gets one copy, and that's it. But Arcturus's version, which they call their ARCT platform, is like getting a blueprint that has a photocopier built right into it. It just starts making thousands and thousands of copies of itself.
So you might be wondering, how does it actually do that? Well, it's a neat little process. First, it gets into the cell. Then, its very first instruction is to build its own copy machine. It makes this enzyme called a replicase. Once that's built, the replicase just goes to town, making thousands of copies of the mRNA. And what's the end result? You get way more protein for a way longer time, all from a much smaller starting dose.
And this is the key takeaway. This is the whole point. Because it's so powerful, you need a much lower dose than conventional mRNA. And that's not just some small improvement. That's a potential game changer. Why? Well, a lower dose could mean it's cheaper to make, but more importantly, it could mean it's safer with fewer side effects. And for diseases where you need to take a drug over and over again, that is a huge deal.
Okay, so that brings us to the main event, Section 3, Showdown in the Lungs. This is where the rubber meets the road. We're going to look at the one clinical trial that could prove all this cool science actually works, or not. This is the trial that could literally make or break the company, and it's all happening in the fight against cystic fibrosis.
The drug in question is called ARCT-032, and it's targeting a very specific group of people with cystic fibrosis, patients who, right now, have basically zero effective treatment options. So you can imagine the need for something that works is just immense.
Okay, and this is where the plot thickens. When the first batch of data from the trial was released, the main number everyone was looking for, a measure of lung function, was meh. It was inconclusive. And, as you'd expect, the stock got hammered. But when you dig a little deeper into the results, there was this hidden signal, something positive that most people might have missed.
So what was that signal? Even though that main lung function number didn't move much, high-res CT scans actually showed the drug was clearing mucus out of the patient's lungs. And this is a big deal, because as leading experts in CF will tell you, and I'm quoting here, mucus clearance is a fundamental sign of restored CFTR function. In other words, it's a sign the drug is actually working at the most basic level. This could be the key piece of the puzzle that the market just glossed over.
So, okay, we've got this promising signal. That's great. But in the world of biotech, hope doesn't pay the bills. You need time and you need money. Which brings us to our next section, racing against the clock. We're going to look at the very real pressures of catalysts, cash, and competition. And really, it all comes down to this one number, 2028. That's it. Based on their current cash burn, 2028 is the year the lights go out if nothing changes. They've been smart with their money to buy themselves this much time, but make no mistake, that is a hard deadline. They have until then to prove their technology works.
So what should you be watching for? Well, the first half of 2026 is going to be absolutely critical. That's when they kick off a longer 12-week study for that cystic fibrosis drug. The hope is that this time they'll see that clear benefit in lung function that everyone wants. If they get that, it could set them up for the final phase 3 trial in 2027. So a lot is riding on the next couple of years.
And of course, they're not the only ones working on this stuff. So how do they stack up? Well, compared to the big mRNA players, their edge is that whole more bang for your buck idea. Superior potency at a lower dose. And when you compare them to gene therapy, the big advantage is that you can redose their drug and it doesn't mess with your DNA. That's a massive plus for a chronic disease like cystic fibrosis.
All right, let's bring it all home. Section 5, the analyst's final verdict. We've got the incredible technology, we've got that tricky clinical signal, and we've got the clock ticking. So, how do you weigh all that risk against that incredible potential reward?
So what's the final call on this incredibly asymmetric bet?
You know, it really comes down to two completely different paths forward. Path 1, success. The next study in cystic fibrosis works, that validates the whole Say mRNA platform, and the stock starts heading toward that $72 plus target. Path 2, failure. The data is a flop, the platform is in question, and the stock probably craters back down to its cash value, around $9. It's about as binary as it gets.
So, given that fork in the road, the definitive stance from the source material we're looking at is a long-term speculative buy. And let's really emphasize that middle word, speculative. This is absolutely not a guarantee.
And here's why this is such a big deal. The whole investment thesis is a bet that the market has gotten the odds wrong, that the chance of success is actually way higher than what the stock price is telling you right now. Because look, a win here isn't just about one drug for cystic fibrosis. A win would prove that the entire self-amplifying mRNA platform is the real deal. And if that happens, you unlock the potential to treat a whole host of other diseases. And that $72 price target could start to look pretty small.
And finally, we have to end with this very important disclaimer. This document is not and must not be construed as personalized financial, investment, legal, or tax advice. Arcturus Therapeutics is a highly speculative, clinical-stage biotechnology company. Investment carries substantial risk of loss and extreme volatility. All investors are strongly cautioned to conduct their own thorough, independent due diligence or consult with a qualified, licensed financial professional before making any investment decision.